Hello traders and welcome to another video review. Today is Tuesday, February 20th, 2024. Let's take a look at the Forex economic calendar for today. Yesterday's calendar was pretty poor with the important data releases. As you can see, today is no better because only what we got here is the RBA meeting minutes from the Bank of Australia. Of course, the Bank of Australia, and this was scheduled already at 1:30. People's Bank of China loan prime rate was left at the same level of 3.45, and that's about the Asian session. During the London session, we got speeches from the Bank of England Governor Bailey and then Bank of England MPC member Broadbent. Both of them are scheduled for release at 11:15. Then we have the speech from German Buba Balz at 2 o'clock, and the key events of today are from the Canada core CPI and CPI data are scheduled for this 2:30. Then 4 o'clock global daily trade price index from New Zealand, and then we got the GDP monthly from Russia at 7 o'clock, at 5 o'clock, and 11 o'clock we got the data from the New Zealand in form of the PPI input. So very poor calendar for today as well. Nevertheless, there are some data from the Canada, so let's take a look what is Canadian dollar doing. The Canadian dollar has broken above the local technical resistance located at 1.3506, just as expected. So this pattern of breaking above this blue line here after the consolidation or correction is done is now active again. Momentum is positive, momentum is strong, so we are apparently moving higher from the level of 50 towards the level of 60, so that's good for the bulls because they can expand the movement towards the level of 1.3530 apparently, and then eventually towards the swing higher 1.3487, because this is the ultimate target for the bulls right now on the US dollar to the Canadian dollar. So this pattern is being repeated right now all over the board, and we should see another spike to the upside. Only a sustained breakout below this low here, which is located at 1.3459, would change the outlook to more bearish, because in that situation we would have a BC correction to the upside and then maybe some impulsive wave progression to the downside. Nevertheless, that's the outlook here. Let's take a look at the Australian dollar. So the Australian dollar for our chart is looking quite interesting. Let me just switch to daily because we can see much more data here on daily. And as you can see, we are trading below 50 and 100 periods moving average on a daily time frame chart. Those averages are located at 6,568. So they are pretty in line with each other. The market went towards the lows located at 6,445. Now they are trying to move higher, but the momentum is still, as you can see, quite negative, 46 points only. So we are still below the level of 50. The level of 50 is the one that separates the positive sentiment from the negative sentiment. So right now we need a breakout above this trend lines here in order to gain some momentum towards the positive zone. And then of course the next target is roughly around 6,627, and then there is one more level which might be interesting, 6,643. So only a sustained breakout above this zone here might be considered bullish. We got of course one more thing here. We got the technical line. There you go. This might be considered as the breakout of the short-term trend line here. Nevertheless, it still doesn't actually look that much impulsive whatsoever. I would rather be focused right now on the lows at 6,445 if there is no breakout above the moving averages. So the outlook for the Australian dollar is still not very clear. What the New Zealand dollar is doing, let's take a look. So the New Zealand dollar is almost in the same situation as the Australian dollar. There is clearly some kind of a resistance here located at 6,176. That's obvious level here for all of the bulls, and then the local high located at 6,134. No, 6,168 makes this zone quite of a zone, because it's key zone for the bulls. So only breakout above this zone might be considered bullish, and then of course there's another eventually target for the bulls at 6,273. Nevertheless, if there is only wave B, if this is only wave B in the overall structure, so let's say the wave E has been completed, if we want to make it in aerial waves terms, so from the top to the, let's say, to the bottom is the wave A. Now we are doing wave B. Maybe wave C to the bottom should be made. We should be paying attention towards the wave A low, 6,033 pips. So only breakout below this zone might be considered, of course, bearish, and the wave C should unfold way lower, potentially even towards 5,859. Momentum is kind of a neutral. It's trying to break up towards the positive territory. Nevertheless, it still didn't actually happen that much. We just spike up and then reverse quite often. So this is the congestion zone. This is the zone when the markets is basically trying to make up their minds. Neither bulls nor bears are in charge of the New Zealand dollar right now. We should wait for the trigger to show us the direction. And if we speak about the New Zealand dollar and Australian dollar, we need to take a look at the gold market. Daily time frame chart of the gold market is showing us very interesting levels. Here we of course got the high at 2,143, which is the swing high, and 2023 high as well. We got another level at $2,087, and then we got the third level at $2,064. So as you can see, we got the swing high, lower high, lower high. There is no lower lows yet, right? Not present on this chart anymore. Why? Because this market is still kind of moving sideways, oscillating up and down, but it's clear that the down movement is way stronger than the up movement for now. And this moving inside of the moving averages, 100 and 200 daily time frame moving averages, doesn't actually means the market is actually doing something kind of important. It's been like this since the end of the 2023, so that's almost month and a half, almost 2 months, apparently almost 2 months of the market going basically nowhere in a very tight zone. If we would mark it as some kind of a pattern, we can see the ABC correction to the downside. We can see some sort of the ABC movement here, ABC movement here. So all of these waves are free waves, basically, even inside of the wave A, wave B, wave C. All of these waves are free waves whatsoever. So A, B, and C. So all of this here is corrective in nature, and we should see some kind of an outcome here from this movement quite soon, because it's already 2 months. So it's very uncommon for this time of the year for the gold to do some kind of movement like this. Of course, the key technical resistances are here on the chart. The key support is here on the chart. There's one more support at 1,920, but if we go back below 2,000 mark, then of course this bearish sentiment might kicks in even bigger, and we can see more downside, let's say, developments than the upside developments on gold and the other assets as well. So this is the outlook for the gold. Nothing major right now, but please be prepared, because it looks like another ABC wave has been completed. Now the market might be onto something. Local bounce from the pin bar, the candle here has been made. We got the confirmation, we got the extension, but the upside is limited towards the 2033 dollars. Where is the 100 periods 50 periods moving average? Of course, only if we break above this level, we can challenge the wave B top at $2,064. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.